Not all mortgages are created equal. And if you pick the wrong one as a first time buyer, you could end up with a higher payment, more debt, and zero room in your budget for, well, life. I see it all of the time. First time buyers obsessing over one thing: which loan gives me the lowest monthly payment, or which one has the lowest rate. But here's the truth: the lowest rate isn't always the best deal, because what you're not seeing are the fees you might be paying to get that rate, or how a slightly lower monthly payment today could cost you way more over time. Some lenders will steer you toward the option that's easiest for them to close, while others will toss out two loan programs and say, whichever you want is fine, without walking you through the long-term impact. And I get it. When you're overwhelmed, it's tempting to just pick the one that has the lowest number and hope for the best. But that's exactly how people end up with regret, stress, or worse, end up house poor. So if you're feeling stuck or second guessing every decision, don't worry, you're not alone. I'm breaking down the real differences between FHA and conventional loans in 2025, why your credit score impacts your mortgage more than you think, how lenders calculate what you can afford and why that number might not actually feel affordable, the pros and cons of each loan that no one explains up front, and the number one mistake I see first-time buyers make when choosing a mortgage. So stick around, because by the end of this video, you'll know exactly which loan actually fits your finances and goals, not just what looks good on paper. So let's start with what everyone wants to know, and honestly, the question you've probably already Googled. Heidi, which loan is better, FHA or conventional? Now, real quick, if you're an active duty service member or veteran, thank you for your service. You may qualify for a VA loan, which is a whole different and amazing option. No down payment, no mortgage insurance. It's unbeatable if you're eligible. But for today's video, I'm focusing on FHA and conventional, since those are the two most common loans for first-time buyers. So, short answer, it depends. Longer answer, let me explain. FHA loans are backed by the government and designed to help people with lower credit scores or smaller down payments get into a home. Conventional loans are a little pickier, but they come with some long-term advantages. So instead of asking which one is better, ask which one fits my situation, my credit, and my goals. But before we get into the numbers, let's clear up a few common myths I hear all of the time from first-time buyers, because misinformation can steer you toward the wrong loan before you even start. So, myth number one: FHA loans are only for first-time buyers. Not true. FHA loans are popular with first-time buyers because they're flexible, but you don't have to be a first-time buyer to use one. You can use FHA even if you bought a home before, as long as it'll be your primary residence and you're not already using another FHA loan. Number two, conventional loans require 20% down. Nope. You can actually put as little as 3% down with a conventional loan if you're a first-time buyer. That said, the lower your credit score, the more you'll pay in mortgage insurance. So while it's possible to do 3% down, it doesn't always mean that it's the best fit. Myth number three, you can't switch loan types later. Totally false. You can start with an FHA, then refinance in a conventional later once you've built equity or improved your credit. Myth number four, PMI is, or private mortgage insurance, is the worst and should always be avoided. I hear this one a lot. People want to wait until they can avoid PMI, but here's the thing: mortgage insurance isn't just a tool, it's what lets you buy with less than 20% down. You can always refinance out of it later, so instead of seeing it as a penalty, think of it as a bridge, getting you into a home sooner if the rest of the numbers work. All right. Now that we've cleared the air, let's talk about how your credit and income actually change your options. Let's talk numbers. I'm going to walk you through a real-world comparison using actual Phoenix pricing so that you can see what FHA and conventional really look like side by side. So, right now in Phoenix, the median home price is around $450,000. So, let's look at the monthly payments. FHA, you're going to be about $2,793 for the mortgage, plus about $199 in mortgage insurance. Conventional, you're going to be about $2,880 for the mortgage, plus $107 in PMI. Once we add in things like property taxes, insurance, HOA, utilities, your total monthly cost looks like this. FHA with a payment of about $3,791 a month, and conventional with a payment of about $3,787 a month. So, yeah, almost identical. But here's the key difference. FHA gets you in with less cash up front. That can be a game changer if you're trying to keep your savings intact or avoid becoming house poor on day one. And while FHA mortgage insurance sticks around longer, conventional PMI can eventually drop off once you hit 20% equity, which usually happens through either paying down your loan or if your home increases in value. So the best option, it really depends on your priorities, monthly savings now or long-term flexibility later. But here's the twist. It's not just about your monthly cost. The way you qualify and how much flexibility you have can look very different depending on your credit score and your debt load. Your credit score and your debt to income ratio, or DTI, can completely change your options. So let's start with credit score. One of the biggest advantages of FHA in today's market is that the rates are often lower than conventional. As of today, Mortgage News Daily reports that the FHA average rate is about 6.34%, while conventional is averaging around 6.81%. The difference might sound small, but over 30 years, it is a big deal. FHA is also much more flexible when it comes to credit. You can qualify with a credit score as low as 580, and in some cases, even lower with a bigger down payment. With conventional, you're going to need at least a 620, and the lower your score, the more you'll pay in interest and PMI. So while both loan types technically allow low credit scores, FHA is usually the better fit if your score is under 700, especially in high rate environments like this. Now let's talk DTI. FHA allows a much higher debt to income ratio, up to 57% depending on your profile. That means you could qualify for more home even if you have student loans, a car payment, or other monthly debt. But here's the caveat. Just because you can qualify at that level doesn't mean you should. Personally, I don't recommend maxing out your DTI because that's how people end up house poor. If more than half your gross income is going towards debt, you are going to feel it. If you're not sure how much you can comfortably afford, go ahead and check out this video. It walks you through how to find a monthly payment that actually fits your life after the mortgage closes. Even though a conventional loan allows just 5% down, if your score is under 700, your interest rate and PMI will be higher, sometimes by hundreds of dollars per month. On the flip side, FHA interest rates are more stable across the board. Whether your score is 680 or 740, the rate doesn't change that much. That stability is a huge win if your credit isn't perfect because you won't get hit with rate penalties like you would with conventional. That's why if your credit score is under 700, FHA might save you money even with mortgage insurance. We've talked about qualifying, but here's the part most people don't think about. Even if a loan looks good today, what's the impact over the next 5 or 10 years? If you go with an FHA loan, your monthly costs might be slightly lower, but that mortgage insurance, it's there for the long haul. Unless you refinance, you're paying it for the life of the loan. With conventional, your PMI drops off once you hit 20% loan to value. And if you're putting 10% or more down, your PMI might be cheaper from the jump. So if you plan to stay in your home a long time and you've got a strong credit score, conventional may save you money in the long run. But if you're focused on just getting in the door or you need more flexibility with credit or income, FHA is still an incredibly powerful option. And remember, refinancing is always an option, especially once rates drops or you build more equity. All right, now that you've seen how FHA and conventional compare in the long run, let's talk about where buyers really get tripped up: working with the wrong lender or not knowing what to ask. What most first-time buyers don't realize, you're allowed to shop around for lenders. In fact, you should. But here's the catch. Don't just ask, what's your rate? Because a lower rate might come with thousands of dollars in points or fees that make the deal worse overall. If you're comparing lenders, make sure you're asking for a loan estimate. That's the standardized form that breaks down all of the numbers, not just the rate. You want to look closely at the origination fees, the discount points. Are you paying extra to buy down the rate? And any junk fees that are tucked into the fine print. If one lender shows a lower rate but doesn't disclose the cost to get it, that is a red flag. If you've ever looked at a loan estimate and thought, oh, what am I looking at? I get it. You're not alone. I walk my clients through these line by line so they understand exactly what they're paying for. And here's another thing. A lot of lenders will only show you a one loan option, usually the one they assume you'll qualify for or the one that they might make the most money on. But rarely do they walk you through both FHA and conventional side by side using the same purchase price and the same down payment. That's a problem. You deserve to see both scenarios clearly laid out so you can make the decision that's best for you. Now, not just what someone else recommends. That's what I do for my clients. And honestly, you deserve that from any lender or advisor you work with. And if they don't offer to compare both, ask, or better yet, find someone who will allow you to compare the two. So, with all of that in mind, how do you actually choose the right loan for you? Let me walk you through the same thought process I use with my clients right here in Phoenix. First, you need to weigh credit score, monthly budget, how long you'll stay in the home, and whether you'll have extra savings left over after closing. So if you're in that 640 to 680 credit range and want to buy with a minimal down payment, FHA might be the stepping stone that gets you into your first home without draining your savings. If you're 700 plus and plan to stay longer, conventional could save you money on mortgage insurance. And remember, no matter which loan you choose, you can always refinance later if rates drop or your credit improves. At the end of the day, the right loan is the one that fits your budget, your timeline, and honestly, your real life. So, what's the best mortgage for first time buyers in 2025? The truth is, there is no one size fits all answer. But when you actually understand your options, you can make a decision you won't regret. The one that gets you into a home you can afford to keep without maxing out your budget or putting your goals on hold. If you want help comparing FHA versus conventional based on your actual numbers, go ahead and check out my free first time buyer class. It's linked below. You'll learn exactly how to run the numbers, how to avoid most common mistakes, and how to buy a home you love without going broke. And if your next question is, what about down payment assistance? You're not alone. I got a video that breaks that down too. I'll walk you through the pros, the pitfalls, how DPA can affect your approval, your payment, and your timeline. You can check that out here. I'm Heidi, and I'll see you on the next video.